Well, guys, Facebook shares are falling off a cliff after hours after they reported their Q4 results. They're down 21%. I am a proud holder of Facebook shares. It looks like Kevin O'Leary got absolutely burned after he was saying that he's buying Meta or Facebook shares ahead of earnings. Now he's down by about, down 20% if he purchased right before earnings. But wow, look at this move. Let's take a quick look at Facebook's earning report. We'll go over the slides, what I think of the company, and why I will be buying shares off of this dip. I think Facebook is a bargain. So hear me out. Welcome back to another video. My name is Adam. On this channel, I focus on my investments, my portfolio. My average cost basis for Facebook was $170 per share, just FYI, and I'm planning on buying, $251, like that's a steal for me. So if you want to find out more on my investment portfolio, I'm mainly long-term, but I do some swing trades. Follow this channel, subscribe to the channel, and check out the links, for example, to the free Discord. But let's get right into it. Down 21% after hours. I'm not surprised off of this move, but I already think Facebook is relatively cheap relative to the other high growth companies. Its price to earnings ratio is 23 already. So, this will probably bring it down to probably below a 20 after the market open. Basically, what analysts expected was $3.84, but they did $3.88 in Q4 of the previous year. So $3.84, how did they do? They earned $3.67. So that's that's exactly a 22-cent miss, 21-cent miss. And as a result, you've seen down to over 20% after hours. So yeah, and a year ago they did $3.88, which is a 5% decrease in year over year. But if you look closely, they actually total revenue was up to $33.6 billion. Relative to 2020, full year revenue was $28 billion. So they actually increased revenue year over year quite substantially. That's a 20% change. However, what happened and what led to this decrease in net income was total costs and expenses was 21 billion compared to 15 million, which was a 38% increase. So although total revenue was up by 20% year over year, expenses were up by 38% year over year. Of course, that led to income basically of about a 1% decrease in income from 2020 to 2021. And that means that their operating margin fell. So basically how much of a dollar in revenue goes straight to the bottom line. Their operating margin fell from 46 to 37%. So 9% decrease year over year. However, what also increased was income taxes. It went from 1.8 billion to 2.4 billion, which is a 32% increase. So their effective tax rate was up by 5%. So the main reason why net income declined by 8%, and you see a smaller decline in earnings per share because they bought back shares. So that basically puts less shares per market. So it didn't, the earnings per share didn't decrease by 8%. It decreased by less because they bought shares throughout the year. They had more shares in 2020 compared to 2021. So that kind of, that's one good thing of being a shareholder of Facebook, which constantly buys back shares, is that it's basically like a dividend. So overall, what the market is not impressed now is that even though total revenue was pretty damn impressive, costs were up by 38%, and also the effective tax rate was up by 5%, which meant a year-over-year change of income taxes of 32%. So that's a pretty big move, and those two reasons combined meant that net income for 2021 was actually less than the quarter ago. So wow, sorry, this is all by the quarter anyways. But when you look at the year ended December 31st for 2021, it's significant increase. So 2021 they earned 117 billion compared to 2020 85 billion, which led to net or diluted earnings per share of 13.77 cents compared to $10.09. So Facebook, their business model of basically running ads and running the social network and ads on their social media networks and their family of apps, as well, not to mention their entrance into the metaverse. I mean, like, this company is just like a cash machine, and they produce so much free cash flow. It's just ridiculous. So, I mean, I don't think you should be concerned about this quarter. Their business ad revenue, which we'll see, is like doing really, really well. And I mean, like, Kevin O'Leary, I mean, I feel sorry for him, but I will be buying Meta shares tomorrow, like, undoubtedly. Like, I will be buying. I mean, anything under $300 I think is a steal, especially considering the current price to earnings ratio is 23, and Meta's growing at a clip of like 37% year over year. They'll probably going to be about 19% year over year, which we'll look at in a second, growth, but I mean for 2022, but still, like, oh, just. So let's see what Zuckerberg has to say. We had a solid quarter as people turned out to our products and to stay connected, and business continued to use our services to grow. Zuck said, I'm encouraged by the progress we made this past year in a number of important growth areas like Reels, commerce, and virtual reality, and will continue investing in these and other key priorities in 2022 as we work towards building the metaverse. So I think that's also part of the reason why costs went up, is because they're investing so much of that money into building out the metaverse. What I want to talk about is share repurchases. It's basically a dividend. So we repurchased 19.18 billion shares, and overall close to 45 billion of our Class A common stock in the fourth quarter and full year 2021 respectively. We had, as of December 31st, 2021, we had 38.79 billion available and authorized for repurchases. And I mean, they still have a bunch of cash, 48 billion. And so, I mean, like, let's take a look at their presentation slides and their Q4 results. And this shows like just unprecedented growth. Advertising revenue, 32 billion, like I previously stated. Revenue by user geography, and you can see most of this revenue came from the US and Canada. However, they're also growing nicely in Europe, Asia Pacific, and rest of the world. So kind of cool. And you can look at, like, obviously their advertising revenue was like significant portion of their overall revenue. Reality Labs revenue was like kind of small, 800s, close to 1 billion. I mean, it's huge, but compared to the rest of Facebook's size, which I mean right now is probably a 650 billion market cap from the 20% drop. And they have a family of apps, Reality Labs operating income loss. So they're actually losing money on Reality Labs, 3.3 billion, which is their virtual reality meta segment. And expenses as a percentage of revenue were actually kind of like flat. Of course, their revenue increased, so their expenses also increased in total, but as a percentage of their revenue, kind of were actually like relatively in line with the rest. So research and development, 21%, which is actually, I guess, consistent with the previous quarters. Cost of revenue was 19%. And so, I mean, I guess they're, spending the same amount on research and development, which, I mean, is growing constantly because their revenue is growing constantly. And so their effective tax rate, look at this. So in Q4 2019 was 20%, and it kind of went back. It was like 4% in Q3 of 2020, but then it's now back up to 19% of Q4 of 2021. So this all also kind of hurt their bottom line, is having to pay more in income taxes. And net income, as we can see, is, I mean, in general, it's kind of like a trend upwards, but compared to Q4 of 2020, like down from 11 billion to 10 billion. I mean, that's obviously not great, but like their expenses just increased. So, I mean, I'm not surprised, and I'm not surprised at the market reaction, because in terms of like the market that we're in, especially tech stocks, if there's even a little bit of bad news, they miss estimates by like 20 cents, the stock gets absolutely demolished. Even though they're earning still like $3.67, they were expected to produce $3.87, and they just did not meet that. But again, they're doing better than Q2 of 2021 and Q3 of 2021. Just, oof. Capital expenditures going up from 2020. I mean, part of the reason why their capital expenditures for periods presented related to purchase of property and equipment and principal payments on finance leases. So yeah, huge increase there from 2020 to 2021. So I don't know, kind of interesting to see. Let me know what you think about in the comments below. They're still increasing daily active people to 2.82 billion. Wow, that's a lot. Like, geez. Family monthly active people 3.59 billion, still increased, like obviously not by a lot, but like still it's impressive that they're still increasing their services. Family average revenue per person $9.39. But this daily active, okay, and you can go by the daily active users. It's interesting to see that daily active users are actually the highest in Asia Pacific, and even the rest of the world. Daily active users are in US and Canada are only 195 million, even though they represent the most amount of revenue. And let's just sorry, like this is the part that I want to really talk about. Like this is just stunning for me. So overall, worldwide, $11.50, 57 cents just for one quarter. So every single person that's using Facebook, if you average it out, they're getting Facebook $11.57 in ad revenue. Like to me, that's like incredibly impressive. Like what a great business model. US and Canada, they're especially leveraging that. So for every user who uses Facebook, I mean, on average in the US and Canada, they're earning $60.57 just from like ad revenue. To me, that's like, that's ridiculous. And I feel this is the highest it's been in like, I think all time, $60.57 per person. Europe is their other, pretty strong market. Asia Pacific, but look at the Asia Pacific, like $4.89. So if they can leverage, what I'm trying to say is, if they can leverage their ad revenue in Asia Pacific, and Europe is okay, I guess, but Asia Pacific specifically, like if they multiply this from like $5 even like to $20, wow, like imagine how much ad revenue would increase. And the rest of the world is actually even flatter. So that's like, to me, that's really, really interesting. Maybe it's like harder to target ads for users for the rest of the world. I just wanted to share that with you. But yeah, I mean, people are just absolutely crapping on Facebook. You even look at Facebook stock over the past 6 months, it's down by 8%. It's done like absolutely nothing. It was at $294, kind of came back up, but now like, oof, stock is getting destroyed. So, Kevin O'Leary, you bought before Meta earnings. I'm buying after Meta earnings. And I mean, like, look at, damn, down 15% since its highs. Like, I think this company is oversold. And finally, what I want to present to you is the analysis. We can expect the candle to be like, let's just do the 1 month, the 6 month chart. Where the candle's going to be like not even on this chart, going to be like somewhere here. I'm buying. Like there's just no way I'm not buying Facebook shares. So for 2022, they're expected 19% revenue growth to 140 billion. So this is a company that's growing like double digits, close to 20%, and you're valuing it at a PE of like 20. Come on, man! Like, come on. That's just, that's ridiculous. Anyways, I think that's all I have for you. I own Facebook stock. As a disclosure, I will be buying more on the dip. I think it's just such a great opportunity to earn. It's easy money. It's easy, risk-free money, in my opinion, long term. Like, oof. Average estimate, analyst estimate, is probably going to be downgraded tomorrow, but right now it's sitting at $400. But like, come on. Let me know what you think if you're buying Facebook shares. BMBM. I'm going to use my earnings to buy the Solo 3-wheel car. If you look at my previous comments, Buddy always comments on how I should be focusing on Solo. So Buddy, you can, anyways, just want to give a shout out to him, such a constant communicator, even though he's kind of making fun of me, but whatever. Anyways, take care, love you all. Check out the links down below in the description, and peace.